over 110 portfolio companies, and of course, a couple of them are raising at the moment. And I've been quite supportive now with trying to help them putting them in front of the right people. And with my experience of investing of almost 200 companies across Web2 and Web3, some are later stage, some are earlier stage. I'd love to share a couple of tips and tricks of how to position your company, but I also want to keep this very interactive, right? I'm not a big fan of just me talking for an hour, but I think what is always interesting is you guys have startups, you guys have all different challenges. So if someone wants to speak up and, if we can talk about some of the specific challenges you guys are facing, or even best practices, I think that's probably most valuable for everyone in the room. At least that's how I typically sort of structure my mentoring sessions. If it's not directly pinned down to like a very, very specific need, such as like pricing or like, customer acquisition costs and things like this. So if that works for everyone, I'm just going to kick it off with a couple of thoughts. And then I would love to understand some of the challenges you guys are facing. How does it work? Can they just speak up and unmute themselves, or do they have to go to a specific location within the room?
Yeah, so I think you can share about since the session is 1 hour, so it end after 45 minutes. So I think the time location, let me suggest you can share about 15 to 20 minutes, depends how much you want to share, right? It can be high level, it can be case studies about couple companies, and then I'll be the one asking questions. But definitely, if people have questions, they will kind of put it on the chat box, pick it up, or they can also unmute themselves to kind of interact with you one-on-one.
Perfect. Okay, awesome. Just want to understand the logistics properly. So the big things which are happening right now in the space is 3 challenges, right? The first one is consumer trust, especially with centralized exchanges being collapsed and people losing capital or people losing life savings. Consumers are basically challenging. So every company which is focusing on B2C right now, in the centralized space, for example, they're going to face challenges of really trying to push that trust factor back into communities. The second thing is growth equity, right? So if your company is later stage, that's where funding typically dries out at first. Because in the crypto space, if you think about it, we haven't seen a lot of exit strategies for investors. There's typically the IPO, right, which is going public, which is basically only Coinbase, and it does not have a native token. And there's a bunch of mining companies which also do not have a token. They're just basically an infrastructure operator. Now, on the acquisition part, there haven't been a lot of strategic acquisitions in the space. Some are smaller, but it's still not as sort of impulsive as it is in Web2. A lot of fintech players have been acquired by data companies, by all the big guys, in order to really scale up their business and product portfolio. Now, what VCs are looking for is effectively exiting the position at some point in time. And you as a founder need to be prepared for that. You need to align with your venture capital fund. What is their time horizon? What is their multiple for exits? That's why a lot of VC funds are shifting towards early stage investments right now, because if they can come in early, they can sell their exposure to other investors who come in later, to the A16Z, Electric Capital, all these bigger funds who are not necessarily able to deploy or invest in very, very early stage companies because it wouldn't make sense from a fund economic perspective. Now, as a lot of these larger funds have realized that problem, they all launched accelerators, they launched earlier stage funds, which are slightly smaller. So if you're an early stage company, you're probably going to have still a good chances of receiving funding because a lot of the focus is happening, right? I talk to so many funds on a week-to-week basis where at the end of the day, that's really what everybody's focusing now. The third thing is token-related investments, right? Token-related investments is almost dead. No one is really looking at that right now. There's some structures with token warrants for equity investments. That's what a lot of investors are doing. But keep in mind, right, even in the bull market last year, a lot of these gaming companies, DeFi companies, all of that sort, they have or wanted to launch token, right? So they're raised on a SAFT, which is effectively an agreement for future tokens, but these tokens haven't been TGE'd yet, right? There was no token generation event. So everybody's sitting on empty agreements, waiting for the tokens to be released, to then go through the vesting period and effectively divest out of this position slowly but steadily to make a return for their fund. So if you are in these 3 areas, that's probably where you're going to have most challenges raising. A lot of funds, and that's across the board, is really focusing on, I would say, mostly 3 to 4 areas, which is developer tools, which is the whole roll-up space, OP and CK roll-up. Then you have security, where a lot of stuff goes into smart contract auditing using AI machine learning or to detect certain skills, but also in terms of like the infrastructure piece, like be it layer 1, be it layer 2, be it gaming infrastructure, be it metaverse infrastructure. These type of things is what a lot of investors are looking at right now, because that's a safer bet, in their opinion, in this market. So now it really depends on where you position yourself, right? For example, if you are launching a gaming company, there are certain challenges you have to avoid. If you're a metaverse company, there are certain challenges you have to avoid. If you're doing something in the centralized space, there are certain challenges you want to avoid. Now, what is quite interesting to name here is that the way you need to position yourself is in a very unique way, right? Especially if you're early stage, which I assume most of them you are. There's 3 things investors effectively looking for, which is the founding team, right? And it's so surprising to me. I mean, we look at about 400 to 500 companies every single month across our fund, across the whole investment team. And I would say still 20% either don't have a team page or have an insufficient team page. So, you need to think about that. Like if you don't have a lot of traction, be it partnerships, be it revenue, or be it the proper product being in place, most of the founders going to be most of the investors are going to be completely betting on you as a founding team. So understanding your domain expertise, understanding questions like what drives you every morning to do that, understanding how the team came together, why did you name the company that way, is very, very important for us to understand. So if you put that already on a slide in a very informative manner, that helps you a lot during these conversations. Another thing we constantly see is unorganized data rooms, right? These are all gives us a pretty interesting aspect of how the teams are actually working with their information. What is their attention to detail like? Because that is effectively needed when you scale a large business. Everything counts, right? Every material you're going to put out there needs to be almost perfect. And that's even if you don't have a lot of traction. I see that as traction, right? If you're able to understand how to do that, if you're able to understand how to work with that, that is extremely important for you and your business moving forward. Now, another challenge what we see is that companies are still deciding if they want to raise a token or if they raise equity or if they do both. And right now, I don't think it's the time to raise a pure token round. Right? At least it's going to make your life a lot harder. It depends if your company is set up to be a decentralized autonomous organization, a DAO, or if that's not going to be the case. Also, tokens in B2B companies have never really worked. I don't think there's one example of a successful B2B token because it's just not working from an economy perspective, from a community perspective, and from an incentive perspective. There might be some in the future once this is figured out, but as of now, stay away from it, make your business easy. In the B2C space, then yes, it might make sense. But here, give them an angle and understand where the value of your business is going to accrue, right? Because we had a big learning from our fund 1 that a lot of companies end up launching tokens and the value didn't end up accruing in the token, right? The equity still was becoming very, very valuable, or with other cases where the company never raised an equity again, but had tokens. So as an investor, you need to understand they want to be on both sides of the table to really understand that they're not leaving value on the table. So once you structure this, build a very strong story around how that would effectively work. And another big topic probably I want to quickly touch on, because I'm pretty sure a lot of people are thinking about it, is the valuation of the company. So in the US, for example, valuations have come down probably between 6 to 10x. Right? It was a 50 million company before, is now a 5 or 8 million or maybe a 9 million or 10 million business. In Asia, we haven't seen that much yet. And that's because in the US, you have an abundance of startups, right? I mean, it's still one of the biggest startups hubs, especially for Web3, where a lot of great companies are being built. In Asia, we have great companies as well, but it's not as many, right? Because the market is smaller technically. Maybe not from a direct person perspective, but from great developers, strong founding team members, and the environment in itself. So that's why a lot of companies which have a geographic mandate, but also who shifted their office towards Asia, because countries like Indonesia, Vietnam, and Thailand, for example, as well as the Philippines, have gotten a strong interest from these investors as mobile phone penetration is very high. The lack of banking system drives people naturally into the Web3 space because that solves a lot of problems from, for example, international remittance and so on and so forth. So in Asia, we haven't seen valuations coming down as much, but probably on an average, what I see right now, if the company is pre-revenue, the valuation is typically around 5 to 15. That's what we see right now, especially in the US happening, unless companies naturally build up hype if they come out of certain branded accelerators, or if they have a previous success from an exit perspective, or if the founding team just have a very, very strong network because they were lead developers at Coinbase or some other companies which have a strong name in the space. Then companies still are able to raise, I would say, up to $25 million, maybe even $30 million at a pre-revenue perspective. In Asia, I would say we still see roughly between 5 to 20. That's probably a range where we see companies being raising at the moment, which I think is fair, depending, of course, their background and how thought out the product it is. And then, of course, if it's a gaming or a metaverse company, valuations naturally come down a bit because it's not as much interest for investors right now. So they have more bargain power. If it's like some of these more, I would say, hyped industries right now, then you probably have a better shot. But at the end of the day, every company, which I believe, which is strong, has a clear vision, is able to raise capital. I would quickly wanted to get an idea, and maybe we can write this in the chat, of the different verticals you guys are building in, just to give me an idea to target my conversation a little bit more. For example, if there's no gaming company here in the room, then we probably don't need to talk about it. If there's no DeFi company in the room, then we probably don't need to talk about it. So is there a possibility to get a quick idea of what you guys are building on, or maybe the organizers can give me a bit more information about exactly the industries and of the verticals in Web3?
Right. I mean, as the guest invites all of you, put it down on the vertical you guys are working on a project. I'm seeing DeFi. Yeah, I think since it's usually a bit like people need a bit like time to warm up to actually chat on the chat room. Let me propose one thing. Since all people on the floor, they're working on some project, they want to build a company around Web3. I mean, would Toby, you open to listen to that pitch and give quick feedback? A bit later on.
So I'm kind of getting a sense of where you guys are, which is awesome. I think there's a lot of interesting questions, especially also a lot of interesting questions happening, which I'd love to answer. I think I've seen a lot of companies over the last 3 years in Web3. I would probably around 10,000 companies in the space, and it is quite interesting what people are looking for, but it's still a majority. It's very congested, of less diversity in what people are building, especially in Asia. We see a lot of gaming, metaverse, NFT projects, developer studios, and service companies, which help Web2 companies go into Web3, especially when they want to launch more direct fan engagement and so on and so forth. But in terms of the verticals, I want to quickly jump in, right? I mentioned a couple of these things, and there's been a pretty big shift, right? In last year, especially also in sort of beginning of 2022, there was a lot of investors excited about gaming. I need to understand the dynamics of that, right? Crypto is an industry where we have very, very limited users, right? And most of the users are here for speculative purposes, right? So when a lot of companies launch tokens, they buy into tokens and hope that the token goes up in order to make profit. There's no direct correlation between users holding token and using a product, right? That's the first challenge. The second challenge is marketing in Web3 for startups is also quite different, because the pure crypto marketing plays, there are a lot of solutions built around it. Like how can you use chain-related data or wallet data in order to then target what that person's interest is or what the person is doing in order to send them direct marketing materials. But it's very fragmented still. Right? There's an interesting company called Luna Crush, which is trying to do that in a space analytics company. They scrape about 10 million social media posts per day. Maybe some of you guys use it. It's a very well-known tool in the space. And they are now pivoting into like, how can we use our data and sort of advertising to certain users in the space for projects to use that. But again, the data is fragmented, right? Stuff is happening on Twitter, on Discord. Even you as a user to be informed about certain projects, you have the same challenges, right? You need to go across various channels. There's not yet a full dashboard effectively or like a search engine where you can get all that data from. Now, these gaming as well as social related constructs in Web3 are interesting for investors because they bring in a lot of people into the space, which means liquidity, right? And we had a $3 trillion market cap. Now it's roughly about $1, right? With the recent pump in Bitcoin, it might be slightly higher. But a lot of people rushed into the space purely from a speculative perspective because we haven't seen a lot of use case being built out, right? I mean, a lot of these NFT projects, you're probably very familiar. What are you going to do with them now, right? Their hype is gone. There's no liquidity on them. You don't really can sell them on secondary markets because you bought them at very, very high prices. And now what are you going to do with it, right? The same as gaming. A lot of games have been advertised and done great, but there's not really been a proper release yet, right? Right now you only have Splinterlands in the space, which is the largest game, and a couple of others which actually took a massive hit. All these economies weren't sustainable. The same as SocialFi. Not SocialFi, but like the social, like a decentralized Twitter, decentralized LinkedIn, like all these things, giving back to the creator economy, incentivizing people in the space. It's also very, very difficult because it sounds very exciting on concept. Like I'm constantly looking for a company who can crush this, but it's so difficult because you're competing with large players where everything is happening, right? So now you need to build a product which is not slightly better, which is a lot better in order to make that work. And so far we haven't seen, I mean, I looked at so many companies in the space, but I haven't really seen anyone doing something over a longer period of time, which has been working. But again, I do think that these are probably the future of the next bull market because you bring in a lot more users into the space, a lot more active users in the space who finally see the utility of that specific technology. And investors right now are looking at these more infrastructure-related companies because they are able to de-risk their position, right? Because an infrastructure is the same thing, right? I mean, if you invest in a road, it's easier to justify that than to invest in a single car. Because if the car goes bankrupt or has an accident, like it's gone. The road is used by many, many cars. So in order for them to scale, it's easy to justify that could be at a higher valuation. So these are all constructs in investors' mind, which shouldn't make you afraid of not building something you're passionate about, right? This is my biggest point. I think as a founder, you need to understand what are you good at, what are you interested in, what is your previous experience, and you will be able to build a great company if that is something 100% committed. If you're now only shifting to build something in the infrastructure space because it's what people are looking at right now, that might be completely different in 6 to 8, maybe 10 months from now. Right, and we've seen this how fast it can shift in 2021 and 2022, but even in 17 and 18 when the whole ICO boom was happening. So for investors right now, it's de-risking their position. It's justifying this to the investment committee of what makes the most sense by having the biggest upside. As a founder, you have to think differently, but you have to sell it in a very similar manner. Right, you have to figure out what are my touch points for scalability. Right, what are my touch points for us, the team, being the best in the world to do that, and how can we prove that, how can we align that? It's a lot about storytelling. And then it's about making favorable terms so you come across. And like, you have to jeopardize a little bit on your ego a little bit, right? If you don't see this valuation works because no one is committing, like go down a little bit, right? Try to have at least, I would say, 12 to 18 month runway in this market, preferably 18, because you never know how long this bear market is going to last. And I don't think it's going to get better anytime soon, to be honest. I could be wrong. I hope I'm wrong, but I don't think it's going to take less than a year for this to properly pick up in consumer trust and these other challenges to come back into the market. Now, these are all things to consider, but at the end of the day, if you're building something you're truly passionate about, and if you're able to depict that on a slide without using, because what I read a lot, which is quite interesting, is like we are solving the industry's biggest challenge by using blockchain AI and help the customers, to operate more successfully in the blockchain space. That is a complete useless sentence, right? Because you're not actually articulating what you do. Like sometimes I need to go through a slide deck and go from 1 to 12 out of 18 slides, and I still don't know what the company is doing because they bring up what's the problem in the market, what's the challenges in the market, like the recent issues, like the market size. But like we need to understand like what are you trying to do and why are you better than anyone else in the market, and why is your team the best one to execute it? That's effectively the only 3 questions you need to answer. That the market is big in NFTs, that the market is big in metaverse in the future, that DeFi was important, that there's FTX. We all know that. There's no point of putting this on a slide, or at least not as a sizable amount of slides. You can put like 1 slide, problems done. I think you need to be very precise and articulate of what you're actually solving. And this is also something where we ask our companies, for example, make a 10, 30, and 60-second video explaining your business. And if you're able to do that in 10 seconds, and 30 seconds, and 60 seconds, you can put it on paper with someone understanding it. And then you're prepared for different situations to pitch your company in a meaningful and in a very detailed manner in certain occasions, depending on how much time you have available. Are you in an elevator? Are you at a conference? Are you in front of an investor? And figure out. But at the same time, when you take in money, be also very mindful of this. If this investor is a great fit for you, right? What kind of support are you looking for? Or are you just looking for capital? Like it's always a two-way street. And I see a lot of companies running into challenges such as, I call it party cap tables, right? Where we have 20, 30 people on a cap table where a lot of angels put in 5, 10K, 15K, 50K, and then sort of staggering up the round, or like, oh, we're going to squeeze this fund and put 2 more funds in. But you're gonna regret it at the end of the day, because typically, especially angels, nothing against angels, but they are not necessarily able to pull out. They want to go all the way, and then you end up having, 20 people who have like 0.01% of your business, and kind of like blocking the whole cap table, making it look clean. You have to organize and deal with all these different stakeholders. So like if you can make your rounds clean, right? Bring in a couple of interesting strategics, and then just try to close it out. On a token, it might be different because obviously you don't want to have too many people having too much control over your token supply, because if they dump it or if they sell it at certain times in the market, which they will, because at the end of the day, I mean, they're not a grant. You will end up having these challenges that your token price is being moved significantly by one party, and you were sort of really reliant and exposed to that party. And keep in mind, we track every single token investor because everything is on a blockchain, when and how they sell it. And you'd be surprised how many people told us that they won't do it, and then as soon as the market provides an opportunity, they are divesting heavily out of such positions. So be mindful of that. At the same time, also be mindful of what is your vision of that company, right? If you're not building a unicorn, if you don't want to get into that space, then also be mindful of what investors you bring on to the company, because they're all gonna be able to, once they have control over the company, to dictate what exactly you're doing, and also be mindful of their return perspective. Ask investors questions like, what is your ownership target? What is your return multiple expectation from their business? So you know how aggressive they are, and what the long-term strategy is. All right, so all these different things you should keep in mind. I know that I almost talked about 30 minutes right now. We said 15 to 20 minutes, but I'm just going to pause you for a second and see if we want to move over to questions, because I see a lot of really cool questions in the chat, which I would love to answer and provide a couple more details on.
Right. I mean, it's super insightful. I've been having like a notebook, just like write down some notes that I don't know. It's really fun to actually call it as like a party cap table. Never heard of that. Coined by Toby. 2023 instead of weekend events.
It's not an academic term, right? So it's just the way I call it.
Cool. There's some really interesting questions. I'll try to blend it. I'll try to frame it to kind of like combine together. Kind of save the time to ask. But before that, we actually do really quick survey and look on the Slack group. We actually have many projects around NFT and DAO, which I think we can also like allocate a bit of time to talk about that later on in the Q&A. At the meantime, as I kind of like try to propose, if you guys want to pitch an idea to Toby and get like really quick feedback, could you raise a quick hand using the emoji function? Then I can also like do a bit like timing on that. Cool. I'm seeing.
I'm also happy to just a quick jump in here. Like, if anyone wants to connect after and set up like a chat, right, and just talk tomorrow or Monday for like half an hour or so, I'm like more than happy to do that, right?
Wow. It's really hard to find people like Toby in the VC scene, honestly. Since Lakshay is raising a hand, why not I invite you to speak, pitch your idea, what you want to try to build inside of weekend events, what a struggle you have right now. Go ahead. Could you also unmute yourself? Or I think you probably have to come on your stage. Just walk on the stage.
Good to meet you, Akshay.
Yep, in the middle. The center stage is for you. You have to stand on the blue chair.
I think you have to go behind it.
Yes.
And then just sit between us.
Yes.
Exactly.
Welcome. Could you unmute yourself?
I think you're still on mute.
Right.
Or...
We still cannot hear you.
Audible? Hello, now I'm audible?
Yeah.
Okay, thanks. So what we are building is Web3 SaaS-based solution for insurance marketplace, and we are building the claim management solution for them. And it is using the smart contract, which making them automatic claim settlement rather than using the human to come and settle the claim. And we are entering right now. We already tested it with Web3 with a person named TwoCover, the company named TwoCover, and they were into health insurance, and they saved at least a lot of money from it. We have a proper data also available how much money they saved, and it was also used by the Indian government in a Ayushman Bharat Yojana, which was a project that the government did. And right now we are looking to make it go into a SaaS model. We have a building two models for that. One is SaaS, where you can use as a subscription based model. Second is where you can take it as a proper customized platform and integrate it within yourself and use it like a private software. And that's the two models we are building. And in the future, we have a plan to launch marketplace for covering B2B insurance.
Awesome.
So that's
what do you think is the biggest challenge for you right now?
I think the biggest challenge is first to making the product properly into the SaaS model and going into and adapting it. Second is to talking with other more customers and understanding what is the pain point they're figuring out. That's already we covered most of them. Right now, the biggest challenge that we are looking is obviously to build a team. The team that is going to work and deliver the product to in the sales, especially the sales team, and also the product team. And the last what we are looking is from the investors as which are coming on board, that they are there to support us in this journey, and they believe in us that okay, we are going to change the world for the better insurance sectors. And micro insurance is the sector that we are looking to enter very soon.
I think the SaaS model is here quite interesting, right? Because it's first of all, it gives you recurring revenue, which is something which is not much happening in the Web3 space right now. I think what is difficult right now is pricing something in SaaS within Web3, right? There's a couple of guidelines we've established, right, which are generally known as well. Is if you sell your product for $10, you need to solve a $100 problem, right? So typically it's 10x the value in terms of price, which is, I think, easy to justify in your perspective, right? Because at the end of the day, the value you're going to enable through your solution should be in that range, or maybe even a lot greater if it becomes if it becomes necessary. The same thing. Also keep in mind what I did when I had a company we had a SaaS as well. Is especially in the early days when you're trying to figure out exactly how to go about it, because there's all sorts of different different constructs from a SaaS perspective, right? You can have a tiered one, you can have, different seats, how all the other companies are doing it. But on average, we realized that SaaS companies are underpricing by 30% or directly pricing it towards competitors, right? Even in Web2, a lot of Web3 companies, just look at what 2 companies are doing and are underpricing it by 30%. So how we typically go about it is like really figuring out, once you have customer discovery interviews, where you think your solution could be a good fit, like change the price. Literally, like on every single conversation, change the price. And that typically differs by 5%. So like you start with a price you think you could price it, let's say, I don't know, whatever, like let's just say for the sake of it, $10, right, a month. And then for every conversation you're having, increase the price by 5%. And you will realize that like you will get pushback a lot later than you probably would expect. Because a lot of if you're, and at least I had the challenge when I was a startup founder, I was like, okay, I'm only a startup. I don't have a brand. I don't have a success rate. So like, you're never going to price your company from an emotional perspective. You price it because you're scared someone would walk away. At least that's how I felt about it. And the problem is that you have a very different perception than your opponent does, or like your counterparty does, who you're trying to sell to. So like the biggest thing is like really understanding the value you're providing. Put in proper, like, oh, if you use our service, you're going to save one person. Or like, if you use our service, you're going to save X amount of money, or you're going to use a service X amount of time, which then results in X amount of capital. And then really try to be aggressive on the pricing and use that as a discovery, right? You can always go back and offer them a lower price if you really want to have them on board. If you say, okay, it's $20 now, and say, oh, no, cannot, then you will realize, okay, if you do this over multiple rounds, where the price sensitivity of your product is from a perception perspective. And then you have 2 options. You either stick with the price or you increase and improve the perception, right? And that's how, like, where a lot of companies like Fireblocks, for example, is able to charge a lot of capital on their solutions, because they did a really good job about branding and image. They used a lot of capital, but at the end of the day, they are charging a lot of money for a service which, in my opinion, could be a lot cheaper. And there will be someone who will offer this as a lot cheaper. But like that's how they're able to achieve that. So like keep that in mind when you're going and really exploring that SaaS business model. But I think that is something which is great, because it's going to give investors a lot of confidence about your business, right? It's going to help you really figure out that you're not just having one-off revenues. You actually have a sustainable revenue model, and you can track certain metrics like churn and customer acquisition lifetime value and things like this, which is harder typically in other solutions within Web3. So I think it's a very interesting solution you're building. I mean, happy to chat offline as well. If there's anything I can add, I dropped my Telegram and WhatsApp in the chat. So if you just message me there, and we can set up something in the next days. But yeah, these are a couple of things I have in mind when sort of hearing this for a short
Yeah,
insights.
definitely we will look into the price thing, and we are also adding AI, IoT in the future and metaverse into it. So a lot of things we will already have a plan.
Just be
Definitely
careful,
we will
here,
have
right?
to chat with you.
Because what happens a lot is that founders are always very ambitious, right? And you have to have that vision, right? Which is fantastic. But if you end up on a call and like you're gonna tell me, oh yeah, I'm adding AI, machine learning, metaverse, and all these things into the play, it becomes like almost unbelievable, right? It becomes like too much to digest in a sense. And then people are going to be challenged and asking, is that something which is actually sustainable? Or they're just throwing around with a bunch of buzzwords? Because not every company in the world needs to be AI, machine learning, and metaverse, right? Sometimes it just adds complexity which is not necessary, or sometimes that's something which is just not necessary right now because the market hasn't picked up yet. Right? I mean, if you look at a lot of the metaverse companies out there, even the big ones, they have very limited user bases, right? And like, even if they have users, they're typically just land holders or plot holders and stuff, and no one is actually engaging. I mean, I've never spent my Saturday night in Decentraland or Sandbox, right? It's just not something which is right now appealing for a lot of people. So ask yourself specifically, when and how does that really make an impact? Or am I just doing that because it just sounds better, right? Because at the end of the day, consumers are very, very sensitive, Like, think about it, right? I mean, you have 1,000 apps, you have 1,000 impressions jumping on you every single day. So if I download an app, if I use a service and it doesn't work instantly, I'm probably gone. I don't use it again, unless it's like referred to me by someone I know, right? Or like I have a certain relationship with the tool, or just particularly excited about what it is. I just leave it and move on and download the next stuff on the App Store, which sounds similar, right? And that's what happens a lot, right? With all these additional layers of technology being labeled onto it, but the infrastructure is obviously not as smooth right now. You're able to potentially churn a lot of customers because they're not able to use it or they don't see the necessity for that. And the same thing is also like investors asking you, right? Don't just throw in all these words. Like if you mention it, if you mention metaverse, then give your investor an idea of why, how, and why is it necessary, right? Why is that significantly improve your customer experience? Because for implementing that, you're going to need talent, which increases your burn, right? You need time, which is taking off your focus right now. So you're going to be multi-layered, which obviously is more difficult to manage. It's going to increase friction, right? There will be certain issues on almost all the platforms I've seen so far. It can be in the vision. I'm not saying you can mention that, but then give a clear outline of when and how this is happening, because that gives an investor a lot more confidence that you actually thought this through and that it adds value in whatever reason you think it does, right? Or even ask for advice, right? I think it's also interesting to hear these investor perspectives of like, oh, do you think a metaverse here could be relevant, right? Because I mean, they also look at a lot of companies and you also want to understand if they actually understand what you're doing and can give good advice regardless of that, right? So keep that in mind as well. Just when you do that, and when you not just only for a pitch perspective, it's really also about understanding if that makes sense, right, for your business, or if it's just like something which sounds cool, might be cool, but is actually not 100% proven or relevant for your business right now.
Yeah, definitely. We will. Let's have a chat whenever you're free, and I will pitch you again how we can go ahead with this model.
Now, it's just generic, right? I'm not talking to you specifically. Maybe metaverse makes perfect sense for you. But in general, I hear a lot that people go on a pitch and be like, oh, we're doing an AI, machine learning, metaverse, NFT. You know what I mean? And they'd be like, oh, okay, let's take a step back. Like, what are you actually doing, right? Why is that relevant? So a lot of these things you can just try to keep in mind, like, for everyone. But yeah, do you have any other questions, or can we move on? Because there's a couple of interesting things here.
I think we really have to move on. Thank you, Lakshay.
Yeah, thanks. I'm looking forward to pitching you.
Good luck hacking.
Thank you.
Yep. I think the rest we're going to try to do 4 to 5 like quick fire kind of like questions. Go as deep as you want, but I'm going to try to mix as many questions as possible because people are really asking. Really ask a bit like generic kind of like questions, right? So funding, there are many ways of like funding as we've seen in Web3 world, just way beyond the traditional like Web2 VC. People have been trying to do projects starting from NFT as a way for raising capital, right? All the hype last year, 1 or 2 years. Yeah. Is raising NFT a legit method to start a project? How do you actually make like a funding scheme that's like appealing to the audience? If NFT is kind of a good approach.
So the thing here is, well, I wouldn't necessarily say that NFT is not a good approach, right? It is actually a quite interesting approach. The problem is there's no utility typically, right? Or like no one really knows what to do, and a lot of investors don't have a mandate for it, right? Think about top of the funnel principle, right? When you go to market, it's like there's a lot of investors in the market, right? There's people who focus on Web 2, there's people who do like Web 2.5, there's a lot of Web 3 native funds. And then think about like how many of them can, even from a legal perspective, even engage in certain fundraising aspects, right? So you're going to narrow your funnel already to probably like 10% of the investors out there, 15%, maybe 20% of the investors out there. So all the other ones are left off the table. Then you need to ask a question. If I use that particular fundraising method, let's say NFTs or tokenized whatever, right? I mean, what is that? Why am I doing this? what is the benefit for the investor to invest in my NFT or my token, and what is that the benefit then for the business? Yeah, if you are never going to raise an equity, if that's an opinion for you because you're really decentralized and you think that every investor has the opportunity to use these different assets in order to provide value to the platform, then yes, it might be a very specific fundraise. But then also be very, very targeted when you reach out, and don't just blast it out to everyone, because you're going to burn these other relationships in case you change your mind, in case of anything changes. But I think what is fundraising to me is an art. I'll be very honest with you guys, because it's not just about just scraping a list of the top 100 investors in crypto and blasting your stuff out to them, right? Sometimes the first name is wrong and there's spelling mistakes. But it's about how creative can you be to connect with those people? Because I'd rather have 10 extremely on point intros rather than having 100 and getting 5, 6 replies and 10 replies saying it's not a good fit, right? Because that looks weird and the industry is very small, so people will understand and approach you. So really leverage that and think about it. How is it best for you to fundraise? And like I said, right now in that market, and probably continuing for the last 6 months, it is equity with a token warrant, if you ever launch a token in the future. If you don't, because you're a Web 2.5 business or just a SaaS business supporting Web 3 companies or a B2B play where there's just no need for a token, then leave it out. Don't even mention it right now. You can do that in the future when the market picks up if you think it's a great fit, but just do a simple equity on a safe. Don't bother on priced rounds in the beginning, because that's just going to be a nightmare of legal fees and stuff like this. Just do it simple. Why combine a safe?
Go ahead.
Go.
Yeah, so it's a bit like technical in the hybrid kind of like fundraising, token also equity. There are also people asking in the room, how do you actually calculate a fair equity valuation and token price? And quickly on, from experience seeing many projects in the space, what's kind of the fair split of the token allocation to like teams, investors, ecosystem development, all kind of things?
Yeah, very good question. So I'm going to first start with the allocation and go into the valuation, because that's like a better way of approaching the question. So what we look at, right, when I look at, let's say, tokenomics, is first of all, how long is the team incentive on a token? And they should get a decent portion of it, but it probably should be vested over multiple years, right? I mean, CC from Binance said it should be 5 years, which of course is long. But at the end of the day, I mean, if you're in a normal world incentivized by equity, it's probably longer than 5 years even, right? But I want to see that a team is incentivized over a long period of time with a decent, pool to keep people aligned and incentivized into the business. I'm not saying 20%, but maybe like 10% of total token supply should probably be allocated to the team. Could be a bit higher, a bit lower, but like I think this is the core thing, right? I mean, you're building this project, you want to be incentivized, but if it's big, it needs to be long, right? It needs to be 5 years, 4 years, vested over that time, linear vesting without having like weird economies in there that like big chunks of tokens are being divested and the team sells it and moves on. Advisors should be very, very small. I don't think advisors add a lot of value, to be honest. It could be in the beginning from a naming perspective, but at the end of the day, I mean, like, I've heard so many stories where advisors just like, claimed to do a lot of things, but never really did anything. But then they just ended up sitting a lot of token and selling it. So maybe like between 1% to 3%. In my opinion, I don't really care much about this. Community is important, right? But it depends on what your token is effectively doing and what the utility of it is. Be careful on like the investor pool, right? I've seen stuff like 15% goes to private sale, right? I mean, of course, across different stages, but that's, in my opinion, too much, right? I mean, you cannot have so much stuff unlocking over a longer period of time. Foundation is very, very important, right? You want to have enough capital to do all these things foundation should do in terms of marketing, partnership, stuff like this, where you want to have a significant size of it. But I think it all needs to be in relation, right? I always look at, there's no, not 5% here, 10% here. Like it's dependent on what your business is and where you see that value, right? If your business is very technical and you have like great people need to incentivize, yes, then the team should be incentivized, right? If your business is a very partnership driven company, then like that is a part where you want to end up having a lot of the supply, right? If your company is very community driven where like that is extremely valuable, then that is an important piece as well, right? Where then it should be adjusted. And that's where I can really see that the tokenomics have been thought through if the business is reflected in the token and it's not just like a standard thing where like, you know, we don't see a difference of all the companies, right? I mean, the best tokenomics are really when the founders think this through of like, what do I need? What makes my business successful? And be able to really drive that and reflect that in your tokenomics. And then, of course, having longer lockups, in my opinion, is a must these days, and especially in this market. No one's going to touch that if that's all unlocking in a year. At least if, for example, I think even on like, I think projects like Step-In and stuff like this, which became very hyped, I think all investors going to unlock at the same time in a year from now, right, to a big chunk. So that's going to definitely decrease the value of the token. I could be wrong, but I think these issues are problematic, right? Especially in this current market. I think from a valuation perspective, it's really about understanding, like having the metrics and the percentages compared to the total token supply, right? So if $1 billion, a billion tokens, let's say, and you have 10% is going to be sold to investors in your private sale, then you need to figure out what is a justifiable price, right? And I think the problem is a lot of people try to value tokens, right? And we do the same thing, right? Even on a fund perspective, when we hold token, let's say we buy them at whatever 10 cents, now they're at 50 cents, we take up to 80% liquidity discounts, right? So we look at, okay, where's your token listed? What's the liquidity in the last 24 hours? And let's say the liquidity is $100,000 and our position is worth $1 million. There's no way I can get even close to $1 million back, even if I sell everything right now, right? So there's so many different aspects of how to price tokens. Of course, that's maybe not as relevant for you guys, but it's important, I think, to understand how VCs think about the space, right? And it's very similar to how options are being priced. I mean, if you're familiar with the Black-Scholes model, then that's kind of like what we are using to price our tokens internally, despite having that piece. You cannot hear me?
Yep, we can hear you.
Okay.
So
I thought someone said
let's do one or two more. Because like if we go really deep, like I don't think like 1 to 2 hours would be enough for you to share your knowledges. And we also have another guest waiting in the line. Let me ask one or two really quick more questions for Toby around the DAO or like the product developments, right? We've been seeing how DAO evolve in the past couple of years. The really OG kinds of like they make a DAO compound to the most like recent of like the Discord-based like centralized progressive decentralized DAO. What is the DAO feature looking like in your opinion? When you see like all the DAO tools, right? What's kind of feeling of that?
So I think DAO is a very, very interesting concept, right? I'm a big fan of DAOs, and I think there's a lot of value to be extracted from them. And I do think they become a lot more relevant moving forward. However, right now, there's only very, very few projects which have been successful, right? Beyond successful. These are mostly decentralized exchanges like Pancake and Sushi and stuff like that. But at the end of the day, right now, all the DAOs I've looked at are still somewhat a Delaware entity, right? They're not fully decentralized at the end of the day. And the problem we also have seen a lot, and I think there was over 2,000 DAOs created, like in I don't know what the time frame was. I think it was a year or so. We just did a couple of research things on DAOs in general. So there's a lot of these constructs being created. And we see a lot of DAO tooling and stuff like this, and companies who are like, you know, building a register of all the DAOs and stuff like this. But there's a very interesting sentiment in the market, right? A lot of investors actually don't believe in DAOs and say, hey, it's too early right now. Like it doesn't make sense to launch a company as a DAO because everybody gives, you know, it's effectively decentralized, right? So like making decisions is it's a hard thing. So like a lot of companies develop into a DAO once they have reached a bit of traction, a bit of market. So like there's still a lot of stuff which needs to be figured out in the space. And I think there's a lot of value to be extracted coming or like moving forward. Right now, we haven't really invested in a lot of stuff which is DAO related, right? Just because it's so early. And I think there's probably going to be a big shift happening in terms of how we look at decentralized autonomous organizations. But I think it's a very interesting way of exploring it, right? I think it's just too early right now for heavily investing in that space. Once we haven't seen like proper proven use cases for that specific ones. But we monitor it, and I think it's accelerating quite quickly. At least what we have seen in terms of deal flow, but also in terms of market insights, what our research team has put together. But I think high level, and I know we're running out of time, that's probably my thought on it, right? So I'm a big fan of it. I think there's a lot of future, big potential. I think right now it's too early. We haven't seen a lot of proven cases. I think it's difficult to manage a DAO structure, especially as an early stage startup, just because of the nature of its decision making. And I think it adds a lot of complexity to it as well, because you really target the OG guys of crypto who are actually caring about this right now and are willing to compromise potentially on user experience and user interface due to the decentralized nature. And these are a couple of the concerns I have, but overall, I think it will potentially be the future.
Right. Cool. The final question on it is really about the views from the VC. Since many audience are building a company, they're trying to pitch to VC or angel investors, right? So they have to get something like mentally prepared. So we know the general, the investment scene has been cooled down the last couple quarters, right? VC are kind of holding cash. Some companies are open up like more rounds or like underwater valuations to try to sustain a bit longer. What kind of a mentality they should actually hold when they are talking to VC, particularly, I mean, like token or VC like you? What startups should prepare in mind when I talk to you right now or the next couple of like months?
What they should prepare, I think, switch it up, right? I mean, I don't think you should start by, getting on a call, for example, with me and be like, hey, good to be connected, blah, blah, blah. Let me share my screen and run you through my deck, right? I don't think that's the most effective way of doing it. How I would picture it is like, VCs are interested in three main things. The first one is why you, right? Which is your founder story, which is what drives you, these kind of things. Second is, what's your secret sauce, right? I mean, why do you deserve to be in that market, and why should anyone in the world use you? Right? Which is a distinction for competitors. The third thing is, what's your go-to-market? And here, almost no company gets it right. And if they do, they're amazing. Because most of the people just have a very, very generic plan of going to market. They say, oh yeah, I'm building a Discord community. Oh yeah, I'm going to sell NFTs. Or like, oh yeah, I'm going to partner with XYZ and blah, blah, blah. But like, how are you doing that? In building a Discord community, building a Twitter audience is not so easy. It's not just done like this, right? Getting partnerships is not done like this. I'm just going to do a paid marketing campaign. I'm going to use social media. I'm going to use influence. How many times I hear this, but it's not that this is the solution to everything. Like the execution is extremely important. It's more important than the idea. So like break it down on the execution. Like how are you going to do that? Like what do you need in order to build a strong Twitter audience, right? Which partners are most relevant for you and why, and how do you get them, right? This is something which is, it's going to make you stand out from everyone in a pitch, everyone. Because everybody is focusing on the product, the features, the market, and always shows up really nice graphs of like, oh, my thumb, and all these different market metrics. And like, competitor analysis, like, oh, we do this is all with all the tick marks I see in almost every single deck. Sometimes, also interesting team slide, but everybody lacks go-to-market, executionable, on point, thought through go-to-market. That is where most of the companies fail. They either fail through management decisions or go-to-market. That's probably one of the biggest issues right now. I mean, let's leave out fundraising for a bit. Of course, that's mismanagement of capital, fair, but like, it's not as easy to just go to market, right? I mean, if you wanted to grow your personal Instagram from 1,000, 10,000 followers by the next 6 months, then you're probably going to fail, right? Because it's so saturated. All these platforms are so saturated. So many companies want to do the same thing as you do. So you need to figure out like, how do you get that unique? And if you figure out a unique angle of how to do that by keeping customer acquisition costs low, through channels, or like, even if you do like, okay, I'm going to do SEO, paid marketing, like which channels, what are you going to do? Like prepare a potential post, right? This is how I would do it. Like, do you have any suggestions? Like, be very, very precise with that piece, and you're going to blow everyone away. Right? Even though if this might not be 100% perfect, but like the way you think about that and like your execution really eats your idea for lunch, right? I mean, it is the most important thing of what investors want to see, especially in an early stage company where there's no proven record yet that you actually can go to market and do that, right? I mean, customer conversations, like really understanding what your customer profile is and how do you target them, where do they spend their time, how do I get them? That is really, really the key metric, or like the key talk you can have with any investor out there. If you're going to nail that and give confidence that you can execute that, I think you're going to have a very easy time fundraising.
Cool. I feel like all of us learned a lot of things from Toby. Many like comments or like advice you share, it's just like coming across the same as talking with like Web2 founders, team executions, right? Rather than just raising fund and then do nothing, right? Investors also care about the return at the same time, right? So once again, thank you so much for Toby sharing. Thank you for taking time in the weekend. We have more speakers. Cool. We'll see you somewhere on Metaverse or offline in conferences.
Sounds